If you know how to analyze businesses and value businesses, it's crazy to own 50 stocks or 40 stocks or 30 stocks probably. And to have some super wonderful business and then put money in number 30 or 35 on your list of attractiveness and forego putting more money into number 1 just strikes Charlie and me as madness.
Hello everybody, this is Tortoise Investing coming at you today with 5 dividend stocks you can buy and hold forever. REIT edition. Now, a lot of REITs are beaten up right now. The interest rates higher for longer have made a lot of these drop into what I personally feel are some great buying opportunities. None of this financial advice. Please do your own research and stuff before any purchases. Just wanting to show you this for some educational, entertainment purposes. Before we dive into the list, please hit that like and that subscribe button. I would greatly appreciate it. Drop a comment down below. Let me know what you've been looking into here lately. And just a quick little peek of the portfolio. I want to just show this off whenever I do uploads going forward. I don't want to hide this behind any paywalls or anything. So for the foreseeable future, when I have 1,000, 10,000, 100,000 subscribers, I'm not going to hide this from you. We're up 17% year to date. The S&P 500 is up 12.97%, and this is how the portfolio is looking overall. You know, we're down and we're red in some of these, but you know what? I'm just going to be adding to these every single paycheck. If these are in the red, I'm just going to add to them. I am long all of these. Now, without further ado, we're going to be taking a look at American Tower Corp, Extra Space Storage, Prologis, Agreed Realty, and Avicii Properties. American Tower Corp down to $166. Let's go ahead and take a look at the 5-year. At one point, this was over 300, so it is nearing in on that. It's like down 45, almost 50%. Year to date, it's down 22%. Adjusted free cash flow yield is 2.85%. Dividend yield is 3.83%. With REITs, you don't look at the payout ratio. You look at the funds from operation. And these are also taxed differently. So, again, always do your own research and stuff before buying anything. The revenue's been increased at a rate of 14% over the last 10 years. Very nice. Free cash flow, 7.97% over the last 10 years. If you take a look here at the quarterly, everything is looking like it is trending in the right direction for the free cash flow and the revenue. Their dividend is one thing that I absolutely adore with this company. Over the last 10 years, at a rate of 19.19%, is they increase their dividend every quarter. Every single quarter, except for one. And right back to it. So yeah, the dividend increase with this company is absolutely bonkers, and I love it. I love that. It's got a great dividend growth. This thing's nearing in on a 4% yield. That is just unbelievable to me. Next up, we got Extra Space Storage. Oh, and if you don't know what American Tower Corp is, before I jump into that one, this is cell phone tower REITs, and they have approximately 219,000 sites. So yeah, and they're international, America, and all over the world pretty much. Now, Extra Space Storage, free adjusted cash flow yield 7.08%, dividend yield of 1.99%. Their dividends have been a little crazy here because they did a recent acquisition. They're paying out for them and themselves. So if dividend looks a little weird, that's why. Take a look at the 5-year here. They had a high of, 200 and we'll call it 226 down to 124. So another one that's down nearly 50%. A lot of these big name REITs are down a lot, down 14% for the year, but I really like this one a lot. Over the last 10 years, this is a market beater. And it's got double-digit dividend growth, which I love. Revenue's been increased at a rate of 16.74% over the last 10 years. Very nice. Free cash flow has been increased at a rate of 19% over the last 10 years. So again, the dividend's going to be a little wonky because they're paying out for themselves and they're paying out for the company that they acquired. So it's just kind of making everything look weird. So $1.62 is their dividend, $1.01 for themselves, 61 cents for the company they acquired. That's $1.62. So this is still in line with everything. But yeah, just pretend this is $1.62. But yeah, they've got some pretty nice growth going on there with the dividend. This company is self-storage. Approximately 1,906 self-storage stores, over 40 states. So very nice. Like I said, they recently did an acquisition of one of their competitors, so that's going to always help with revenue and free cash flows going forward. But extra space storage, I like it. I hold it. Next one, Prologis. This one's been one, that's been on a lot of people's radars. This is one that I see come up a lot for others. Free adjusted cash flow yield of 4.33%, dividend yield of a little over 3%. Take a look at the 5-year here. At one point, we were hovering around 170. And it is down to 114. It's got a recent big dip. Again, a lot of these REITs right now are on that big dip. The revenue's been increasing at a rate of 11.53% over the last 10 years. Take a look at free cash flow, 26.84% over the last 10 years. Beautiful up and to the right. And the dividend, 12% growth over the last 12 years. This is just a nice little set of stairs. They had this massive hike right here, which I'm sure is helping with their percentage. Just went from 63 cents to 79 cents back from 21, 22. But yeah, they are a great REIT. Let's read in here real quick. Prologis, the global leader in logistic real estate with focus on high barrier, high growth markets. As of December 31st, 2020, so this needs to be updated a little bit. The company owned and had invested in wholly owned bases or throughout co-invested ventures, properties, development projects expected to total approximately 984 million square feet in 19 countries. The modern logistic facilities to a diverse base of approximately 5,500 customers, principally across two major categories, is business to business and retail online fulfillment centers. So, yeah, it's in a space that's definitely going to be needed and is growing. So, Prologis, another one that I like. Next up, we got Agree Realty. They are off a recent high again. 5-year chart here, right at $80, so a little bit over $80, and they are down to $56.94. So the reason I chose them over Realty Income, which is the dividend income, monthly paying income, they get a nickname for themselves, is Realty Income keeps issuing more shares and they're diluting a whole lot right now, and that's never a very good thing. And over the last 10 years, Agree Realty has outperformed Realty Income, and it has kept up and at times beaten the market. So that's the reason I picked this one to show yins over Realty Income. Not to say Realty Income's bad. It's been around forever and a day, and it's got a super high yield right now. But yeah, you just, again, do your own research and stuff. Revenue's been increasing at a rate of 29% over the last 10 years. Free cash flow has been increasing at a rate of 32.8% over the last 10 years. They are also issuing back shares. A lot of REITs do this for purposes of, instead of taking on more debt, especially now with interest rates being as high as they are, they issue more shares. So this is a monthly payer, which is very nice. A lot of people like that. The reason that this says that this dip, 5.10%, is because at one point they used to pay quarterly, and then they switched over to monthly. So that's the reason it's thrown it off. They usually increase their dividend. It looks like 3.8 to 5.8%. So you're looking at low to mid single digit growth which isn't bad for a monthly payer, not bad whatsoever. Another thing that I really love about this company is their occupancy rate is just like a tick below 100%. So they have their buildings filled with, their tenants over people and great businesses. The company owns and operates a portfolio of approximately 1,027 properties located in 45 states. And I can tell you that this is going to be more because, again, this is from 2020. But yeah, Greedy Realty Corp, I like them. I like them a lot. And lastly, we got Avicii. Oh, Avicii, you're below $30, and I love that. If it stays below 30 and I get paid again, I'm just going to throw my whole paycheck at that. I'm not even going to look at anything else. Adjusted free cash flow yield is 6.77%. Got a dividend yield just a little bit over 5%. Very nice. Let's take a look here at the 5-year. Looks like Avicii ticked up around 36, right at 35, 36. A couple months ago. Was that back in, April last year? August last year. And they're down to 29.73. Anytime this drops below 30, my eyes get wide open. Let's take a look here at the revenue. Revenue has been increasing at a rate of craziness over the last 5 years, 66.8%. The cash flow has been increasing at a rate of 71.80% over the last 5 years. That's just crazy, crazy, crazy. They got a dividend above 5%, and they're increasing their dividend at a rate of around 8% pretty consistently. So that's pretty nice. That's what they're aiming for, is the middle single digit range, and they're usually on the upper end of that. So they, I think I read a thing that they are looking to target 6 to 8% growth going forward, and I think that that's something that they easily can do. They're the properties that they are over is like Caesar Palace, your big name gaming casinos in Las Vegas, and if I remember correctly, their payouts, like collecting rent, is 100%. So yeah, and whenever they do their leases, they're usually long-term leases, 15, 20, 30, 40 years. So when interest rates like now are just going crazy, a lot of these REITs will have contracts that fluctuate. When VICIs are locked in, you're locked in at it. And a lot of places should do that. They'd help a lot of these out. That's the reason you don't see Avicii down as much as you do a lot of these right here. Not to say that there's anything wrong with them. I think these are all great companies, but it's just like Avicii's ahead of the game. They're ahead of the game. They got 29 gaming facilities. I think that's even higher now. But yeah, that's 5 REITs, great dividend paying REITs with some great dividend growth that you can buy and hold forever. I hope you enjoyed that. As always, make sure to hit that like and subscribe button for more. And until next time, see yous.